Hello, this is Matt on the Moon Lambo channel. Alright, so I'm covering Hodor's blog here today, and he typically just has so much information in every blog that it's usually the only thing I cover in a particular video if I cover his blog. Not so today. Reason being, he's covering just one topic, and this piece is titled Trading Secrets. And of course he is indeed referencing XRP, but it can be broadly applied to crypto the way in which it's written in this particular piece. So I'm going to be running through this. I also want to share with you a sentiment from an XRP crypto trader, a bullish tweet from just several hours ago about XRP and where it's heading. I've also got a piece, and it's titled something along the lines of in the next bull run, we'll see Bitcoin's true potential. And so technically, yeah, the piece is about Bitcoin, but I think a couple good points were made in it, which I want to cover. But I think more so what applies to crypto, and at least one of the points specifically I'll be showing you to XRP. I just think that a lot of the people that are out there that are just Bitcoin maxis, damn, you got it wrong. But unless there's actual utility to be had with Bitcoin, but there's been no evidence after a decade that there's any traction, really, any meaningful traction whatsoever in terms of utility with Bitcoin, unless you want to make the store of value argument, which in and of itself, I just don't think that's going to instill investor confidence. But anyway, that's a story for a different day. And then I'm going to end the video with a piece unrelated to this stuff, which is why I'm saving it for the end. And it's titled, Russia Regulates Digital Rights, Advances Other Crypto-Related Bills. Hey, regulatory clarity, maybe? So I'll save that for the end again. Before we get going here, if you would please delicately tap that like button. And if you're a fan of Ripple and XRP, well, thanks for joining the party. Go ahead and subscribe to the Moon Lambo channel if you love your mama. Come on, and you know you do. Go ahead, subscribe to the Moon Lambo channel. All right, let's just dig in. So I'm not going to read this top part here. I usually love reading his intros, but in the interest of time, maybe I can just kind of summarize what he said. He was kind of talking about his initial journey into the world of crypto in 2013, which very well written, very fascinating. You should check this out if you have the time after this video. But he was talking about the kind of the challenges of getting money into U.S. dollars converted into crypto into the first place. Talks about how people around him were kind of warning him, hey, this is really high risk. You sure you want to do this? And he's talking about Mt. Gox and all that good stuff. Earliest, it might have been the very first cryptocurrency exchange, right? If not, it was one of the earliest ones. Whatever, I can't remember off the top of my head. It doesn't really matter. But he ended up talking about how he was over that time period. And this is back in the day. So Bitcoin, he says it was $100 when he jumped in, and over whatever the time period was, he held hundreds of Bitcoins, which you can imagine what that's worth today. I'm not going to whip out a calculator for the sake of this video, but hundreds of Bitcoins, that's a fortune right there. So, but he did go on to speak about how ultimately his strategy came down to just holding, which ultimately became hodling. Yes. So let me scroll down a little bit further here. Here we go. Here's this. I think that's where I wanted to jump in. Yeah, this buy and hold strategy. So check this out. He writes, this buy and hold strategy was the one technique adopted for the next 4 years as I was distracted by various consulting assignments that required all of my attention. Instead of actively trading and trying to supplement my income, I merely took whatever extra cash I had and continued to accumulate cryptocurrency. The lion's share of it was XRP. And he cited earlier in the piece, by the way, that Bitcoin, he had his reserves about it. So he's buying it. He'd say trading it perhaps. But he's like, how could this technology ever take hold if it's so slow? And so he was a skeptic back then, not a maximalist of any kind, just purely looking at the facts and saying, does this make sense? And so anyway, it certainly didn't make me feel smart along the way, as far as holding and accumulating cryptocurrencies. I was warned by almost every person I talked to that what I was doing was high risk and I could lose my money. So that's what I was referencing just a moment ago. Okay, but that buy and hold strategy eventually proved effective for me. It took years of patience, however. So keep in mind, look, I've only been in the world of cryptocurrency 2 years. I think that the asset class is here forever, unless you think the internet itself is going away. So I think that some people, I know we all want everything to Moon so we can have Lambo tomorrow, right? But I think it would behoove everyone, including me, to just have some patience. I don't know when this is going to happen. Yes, I'd like for the whole asset class to blow up in a very positive way sooner than later, but I don't care if it takes 5 years until the next bull run happens. I will be here, and I will be talking about XRP, because I believe there's something to this, and I believe I found it before pretty much every other human on the planet. which we're going to get into in that piece I cited about the next bull market for Bitcoin. So hold on for that one. And then he writes, the experience had the effect of making me skeptical of anybody that proclaimed that they could make a living off of day trading, whether it was crypto or stocks. The day-to-day trading seemed like a rigged game to me, and the exchanges were the only ones to make steady profits off of crypto, it looked like. Over the years, however, the liquidity in the market improved, along with the creation of hundreds of more exchanges, thereby increasing competition for traders who were willing to give crypto a try. I started to encounter individuals who were experimenting with trading crypto, and occasionally these turned out to be professional day traders or forex traders. Now, before I read further, I actually did mean to state this at the beginning. At the very top, and he's very clear about this, and this is very important. He writes, I am not trained to give or provide financial advice. Nobody mentioned in this article is a financial professional, and this blog should not be considered financial advice. People should not trade with any amounts that they cannot afford to lose. Likewise, my channel is not here for financial advice. It's for the fun of it. I'm an XRP community member. It's for entertainment. I love talking about this stuff. I have a genuine passion, interest, whatever you want to call it, and that's why I'm here doing this stuff here. But I don't have a financial background either, and I don't make price predictions. I don't say for sure where the market's going. I just tell you the things that I think maybe potentially could happen. I like sharing my opinion, and I like to engage in critical thinking. So just to be real clear, since we are talking about trading here, don't get all jazzed up and go buy a bunch of stuff and think you're going to make money trading, because almost every trader on the planet loses money, something like 95%. So here's the subheading, Harry the Wizard, and this is him here on Twitter, and he does indeed have quite the following. We follow each other, but he has 23,100 followers, so well deserved. And then Hodor writes about Harry the Wizard. One of the traders that appeared on the scene in 2017 was a forex trader from the United Kingdom. He ran a Discord server, and back in 2017, I was trying out Discord as one of the social media platforms that seemed to be gaining in popularity among crypto market participants. I joined his Discord server. It was one of 5 Discord servers that I was invited to during that year. Even though I eventually left Discord because of its fast-paced nature, the experience left an impression on me. There were many people trading crypto nowadays, many more than when I started in 2013. Over the next 2 years, I watched at Geraldo XRP, that's Harry the Wizard, send out observations. He didn't always communicate predictions over social media, but when he did, they were almost always eerily spot on in terms of the direction the market would take, or the price levels that would be reached. This earned him the label Harry the Wizard as a reference to Harry Potter. Of course, while the market was rocketing through the stratosphere in 2017 and early 2018, it was a pleasant experience to see his periodic predictions. And he's got a subheading, 2018 and first half of 2019, sour market. After the price decline started in February 2018, I noticed that, instead of predicting higher prices, Harry would sometimes tweet out predictions of lower price levels, or he'd predict the end of a long-awaited rally. While we, the collective we, don't like price declines, veteran traders like Harry approached it with ice-cold detachment. And I love that mindset. Oh my God, I'm the same thing. Throw emotion out of this whole thing. That's what I say. That's my personal opinion. That's why when it comes to XRP, I am impervious, bulletproof impervious to emotions when it comes to like the volatility of XRP. And I continually put my money in. I don't care if it goes up, if it goes down. If I'm right, it will pay off. And if not, then I'll say, okay, hey, at least I only put in what I was willing to lose. That's just my personal stance on it. But those of you who are new to trading may be wondering, how do you make money off of falling prices? And here's where we get into the world of shorts, or trading positions that expect and plan for price declines. If you already know what shorting is, feel free to skip this section. Let me begin this section by asking you a question. If you knew with absolute certainty that the price of XRP was going to double in the next week, would it affect your behavior? Absolutely. Most of us would be taking out personal loans to buy more, and that's the nature of a sure thing. Now, what about if you knew with absolute certainty that the price of XRP would go down by 50% in the next week? What would you do? Here's where it gets fascinating. Many of us, most of us in fact, would just leave the market. We'd say, well, if the price won't increase, I might as well just stop trading. But experienced traders, those that understand market psychology and things like support and resistance levels, will instead take a short position. They would temporarily sell their XRP and obtain cash. Then they would wait for the market decline in price. Then they would buy back in, thereby receiving twice as much XRP for the same amount of money. It's a tried and true way to quickly increase the amount of money you have in your stash. And by the way, I want to comment here, yes, quite technically, I could have attempted this and tried this over the last nearly 2 years I've been in the world of crypto, and I don't know what I'm doing, so I'm not doing it. I'm not going to just jump in and be a trader like so many people in the world. I'm not specifically citing the XRP community, but so many people just jump in and they will emotionally buy and sell, and that's why I decided my strategy, since I don't know what the hell I'm doing as it pertains to that, and I do believe in XRP for fundamental reasons for the long term. I will buy and I will hold. And then when it's abundantly clear that there's been some tremendous parabolic action, then maybe I sell some. Maybe I then. Maybe I will then, but not before. I'm not going to try and time the market. I simply will not. I'm just sharing my opinion with you. And then Hodor writes, contrary to popular opinion, it's not just whales that can play this game and increase their holdings. It also includes ordinary day-to-day traders that pay attention to the market and have seen consistent chart patterns. So some can do this. Clearly some can do this, but it's the minority. Right? Harry uses the term levels. When he was discussing his techniques with me, there were no fancy chart pattern names or terminology. It was basically our basic charting of historical highs and lows. Although he never described his approach as comprising multiple steps, I deduced his approach from his description and his charts. Harry trades in Forex as well, so these techniques may be similar or applicable to other types of markets in addition to crypto. All right, step 1, obtain asset price history. In his charts, Harry sometimes uses candle charts where each candle represents 1 day. In other words, he uses 240-minute candles, which represent a full 4 hours worth of market activity. Step 2, draw the lines. This is where Harry hides his cards somewhat. His predictions are notoriously accurate, and he's so confident in his findings that he invites other technical analysts to comment on the same charts he's created, which clearly show where he believes the support and resistance levels exist. Typically, he and other technical analysts will look for where collective trading turns around and proceeds in a different direction over a significant period of time. How much time? In some of his analysis, Harry tracks price behavior and makes infrequent predictions over the course of days and weeks. So where does Harry get all these great-looking charts? What tool does he use to research different asset classes? He uses a site called TradingView, which is tradingview.com. The site is free and allows any user to create a chart for their own, targeting a variety of asset classes and markets, including Forex, stocks, and, of course, for our crypto purposes, crypto. The user has to do 2 things. 1, select a symbol on the landing page, and 2, create a chart, the full feature chart option. Once you've got the hang of constructing your own charts, you've taken the first steps at learning to analyze price movements. If you're new to charting, it's probably a good idea to try a few charts that target different assets and perhaps even different asset classes, such as precious metals. And step 3, pay attention. Harry rarely predicts a direction for the market. His approach is to identify levels, the ranks of price lines that he draws on his charts. Then he notes when a particular asset, whether it's gold or XRP, is approaching one of these boundaries. Essentially, the market will make a decision at the boundary, whether it's the lower boundary or the upper boundary. The thought behind this approach is that if the market breaks support significantly, it will eventually fall to the next support line. However, if it seems to play around the support level and then bounces back much higher, it could mean the start of a rally, or at least a small period of recovery. While these general rules, even the best traders can be completely mistaken, though. Markets have a notorious history of unpredictable movements based on speculative fervor or emotion. This is why it's important to pay very close attention to the market when it's near these boundary levels. You may think Harry is one of those stylish traders that sets limit orders and then goes to the pub, but he's not. And he writes, here's my actual question to Harry from one of our actions on Discord. Hodor, do you use limit trades at all times, or do you ever use market for when the trading is moving fast? And Harry responds, I never use limit trades, always market. And then he states, Hodor goes on here, it doesn't get any more clear than that. While a limit trade is convenient for those of us that are armchair quarterbacks when it comes to trading, professional traders who are betting with their own money, sometimes with leverage, are glued to their computer while they have money in the market. The only time they relax is when they are in cash, or in the case of cryptocurrency, in a stable coin of some kind. Which means you better hope that Tether doesn't blow up, right? That's me talking now, right? Because it's only backed, like, it's actually not a one-to-one backing. It's, I think, they publicly announced this too. Last I saw was months ago. Tether's backed like 75%. I don't know, it's kind of crazy. Anyway, so let's go ahead and hop into the next here. So this is an XRP community member, chart analyst, who tweeted out just several hours ago. XRP taking liquidity on a healthy retrace and mark a double bottom, has never been bearish and has never invalidated bullish targets. This chart included the final bottom since day one. Liquidity is what matters. It can drop, but won't change the daily bullish outlook. And so here's this chart right now. I just wanted to share a positive sentiment, especially given what's been happening price-wise for like the last couple weeks or so. Right? Next piece here. This is titled, Next Bull Market Will See Bitcoin Realize Its Full Potential. And I just wanted to cover, there's a piece towards the bottom of this, very short part of it that I was interested in sharing with you here. Here we go. And it's titled this. If you believe Bitcoin has a future, then the math is simple. And you might as well state, for the purposes of us, since this is an XRP-centric channel, you might as well replace Bitcoin with XRP. If you believe XRP is a future, then the math is simple. Although technically the numbers are different because there's different quantities of XRP versus Bitcoin. I get that, but just think conceptually the point that the guy's getting at as I'm reading this to you. All right, Mr. Dillon walks us through an assumption, and it doesn't matter who he is. He's what's his title? If I can quickly find it, I don't want to make you guys sit there. I read it earlier. I don't know. This here we go. Jared Dillian, right? In a Bloomberg opinion piece today, Bitcoin bear turned bull Jared Dillian, an investment strategist at Malden Economics, impressed us with the greater need for a stateless currency and store value held outside the financial system. So there you go. Now you know who he is. All right. So anyway, Mr. Dillian walks us through an assumption and projects a simplified scenario in favor of Bitcoin's price rise. Considering that only 0.5% of the global population has adopted Bitcoin, with current availability standing at 16 to 17 million, excluding coin loss, as adoption rises, the price will follow. Right, and think about that. So with 0.5% with Bitcoin, given that it's the most popular one, I don't know off the top of my head what that would be for XRP, but presumably substantially lower, right? Which bodes well if you're in early, right? That should be super duper if we're right about XRP in the right direction, and if it is actually adopted. Anyway, piece continues. But Jared adds another point of view to his argument supporting Bitcoin's price rally. He reiterates the dot-com bubble analogy, which saw tech stock investors discounting the internet's promise and dreaming their way to the moon with their holdings. As we all know, the rest is history. He adds, quote, but the promise of the internet was real, and over 20 years that promise came to be realized, and a real bull market, not a bubble, developed. It seems like 99% of the dot-com stocks disappeared, but a handful went to $1 trillion market caps. Do you see how this parallels to crypto? It's astonishing. So many people just don't get this. He goes on to say that a similar scenario will befall the cryptocurrency market and that the initial bubble has already come and gone. It's time to get down to the hard work of making meaning out of Bitcoin's underlying technology, the blockchain, which he believes could be as seminal as the internet. Upon his optimism for a soon-to-happen bull run, Jared concludes, quote, I believe there will be another bull market much larger than the first one, where the potential is finally realized. Bitcoin is currently in a state of neglect. I don't think we'll have to wait 20 years for the second act. So there you go. And again, like I said, I know it's about Bitcoin, but conceptually, all of that applies to every single cryptocurrency, including XRP. All right, I got this tweet from XRP Crypto Wolf. Thank you very much, good sir, for sending this to my inbox here. And this piece is titled, Russia Regulates Digital Rights, Advances Other Crypto-Related Bills. After much deliberation in the past months and years, Moscow has recently taken important steps toward regulating the crypto space. These are these are part of the efforts to open the way for the development of the Russian digital economy. The country, heavily dependent on energy exports and hurt by Western sanctions, needs alternative sources of revenue and cannot afford to turn a blind eye to Bitcoin for too long. Really, you should say cryptocurrency there, I would say. But Look, I'm not going to pretend like I've delved into Russian regulation. Like that's not my idea of fun reading on a Saturday afternoon. But I did want to highlight this because I like conceptually the idea of governments beginning to figure this stuff out, and I hope the United States picks up pace on this as well. So that's the reason that I wanted to highlight this. All good things in time, though, right? But that's it for this video. Thank you so much for watching. I really do appreciate all the support. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!